Beneath the surface of the usual suspects, something extraordinary is happening. A lesser-known company just skyrocketed over 1,000% no. It's not Nvidia, it's not Microsoft, and it's not just retail hype. This isn't a meme stock or a passing trend. One is riding the rare earth supply chain boom, supported by Apple and the Pentagon. Another is reshaping the future of AI chips in China, fresh off a 10-for-1 split and a record-breaking $4 trillion market cap. As we reached 1,000 subscribers in this growing community, we wanted to share something meaningful as a thank you. We've put together a free guide. It's a concise guide that breaks down the strategies top investors rely on to identify high-potential opportunities in the market. You'll find the link to download it in the description below. Do check it out, and if you find value in this video, please like, share, and subscribe so you don't miss out on potential opportunities. Let's get started with this stock, as it's poised for a significant move. However, first, let's review the fundamentals. Yes, the chart is signaling a breakout incoming, but before we get too technical, let's step back and understand the why. If you're searching for a pure-play quantum stock with real-world traction, government contracts, and cutting-edge computing power, then D-Wave Quantum ticker, QBTS, could be the asymmetric bet you've been waiting for. Smash that like button because this one is about to get spicy. What sets D-Wave apart? While most quantum startups focus on the long-term goal, universal quantum computing that's years away, D-Wave isn't waiting. Instead, they've carved out a unique niche, fully committed to quantum annealing to solve real-world optimization problems now. Logistics? Covered. Financial modeling? Covered. AI training, drug discovery, and advanced simulation? All of it already underway. And they're not just building, they're deploying. D-Wave's systems are being used by real clients to solve real computational challenges. That matters. Let's connect the dots. Launched the Advantage 2 quantum system, their most powerful machine yet. Strategic partnership with Yonsei University to promote adoption across academia. Raised $400 million through a follow-on offering, this is no longer your typical pre-revenue startup. 104% quarterly price increase despite being removed from the Russell Index and over 1,114% one-year return, completely surpassing the broader U.S. market and software sector. With growing investor confidence following the launch, D-Wave is quickly shifting from a speculative gamble to an early-stage platform company. Yes, it's still unprofitable, but that's not the point. Sure, D-Wave isn't generating positive cash flow yet, but neither was Amazon during the dot-com bubble. The rollout of the Advantage 2 system, revenue-positive contracts, and growth in quantum as a service are supporting a future-oriented story. Although the current price is nearing the average analyst target of $16.57, don't mistake that for a limit, especially in a momentum-driven market. Let's shift to the chart. QBTS has surged over 1,000% from below $2 in less than a year, a parabolic breakout supported by institutional backing and speculative fervor. Since reaching nearly $20, it's been consolidating within a tight range, a typical digestion phase, not a sign of reversal. That's your green flag. For traders, buy the dip. Watch the $14.50–$15.50 zone. It has been tested multiple times and bought with conviction. A low-volume pullback here presents a low-risk re-entry. Breakout trigger. A strong move above $19.75 to $20 accompanied by high volume could propel QBTS into a $25 to $28 target zone, driven by retail FOMO and algorithmic momentum. Invest in this consolidation zone if you're betting that quantum computing will be the next wave in AI. Real product, real clients, and first-mover advantage create a long-term tailwind. Why QBTS deserves your watch list. Now, this isn't just a tech flyer anymore. D-Wave is becoming a national asset in the post-AI era. With governments prioritizing sovereign technology, institutions investing in next-generation computing, and the quantum story finally gaining retail momentum, QBTS could become the Palantir of quantum speculative today, essential tomorrow. This stock isn't for the faint of heart. It's volatile, speculative, and driven by stories. But it's also early, explosive, and riding the wave of technological disruption. So, whether you're trading the next breakout or accumulating for the 2030 vision, let the chart guide you. But remember, the story has just begun. The next is Nvidia, ticker symbol NVDA, the AI titan at $4 trillion. But what's next for investors? Buy, hold, or sell? After becoming the most valuable company in the S&P 500, Nvidia's $4 trillion milestone isn't the end. It's the beginning of a new global chess match. On Tuesday, Nvidia increased over 4%, reaching new record highs as CEO Jensen Huang confirmed the company is applying to restart H20 GPU sales to China, following a surprise U.S. ban that previously wiped out billions in revenue. In a late-night blog post, Nvidia revealed that the U.S. government has assured license approval, paving the way for resumed shipments. This move could generate $15 to $20 billion in revenue in the second half of fiscal year 2026, contributing up to $0.50 per share in earnings. And smart money is already circling. The strategic shift occurs as AI demand in China increases and geopolitical discussions become more transparent. Huang's meeting with President Trump in D.C., followed by his third visit to Beijing, demonstrates the continued importance of China to Nvidia's profits, which account for nearly 13% of the company's 2025 revenue. Let's be clear, this isn't just about chips. It's about global position. Nvidia is also releasing a new export-compliant chip called the RTX Pro GPU, specifically designed for China. This move bypasses export restrictions while maintaining sales momentum. On the chart, Nvidia is exhibiting classic staircase action, higher highs and higher lows, with each dip being aggressively bought. For those looking for a potential investment opportunity on Nvidia stock, for traders, buy the dip. Keep a close watch on the $162 to $165 zone. This area has served as a reliable launching point in recent sessions. If price pulls back here on low volume, it could present a strong re-entry point for swing or momentum traders. Breakout entry. Momentum traders should monitor the $172 to $174 range. A clear breakout above this level, supported by strong volume, could lead to the next surge higher, possibly reaching $180 and more. For long-term investors, this is more than just a trade. It's a long-term bet on AI infrastructure. With data center demand soaring, the Blackwell GPU ramp in progress, and Nvidia maintaining its dominance in AI training and inference, continuing to scale at current levels still makes sense. Heavily on pullbacks. If the market offers you an opportunity like a macro-driven dip back toward the $150 support level, don't hesitate. That's where institutional buyers and patient capital are likely to reload. Whether you're riding the short-term momentum or building an AI conviction position, Nvidia continues to set the standard for the next tech supercycle. Nvidia is no longer just a chip maker, it's the essential supplier of tools in the AI gold rush. As competitors hustle, Nvidia is laying the groundwork. Are you adding to your portfolio or waiting for a dip? Share your thoughts below on this stock. All right, moving on to MP Materials, which has the stock ticker symbol MP. This company is the U.S. rare earth powerhouse quietly fueling Apple, EVs, and national security. The stock price has sharply risen from $30 and above to $58 as of today, July 16th, since our last discussion 3 weeks ago. While Wall Street has been sharply focused on flashy AI chip companies and trillion-dollar cloud giants, the real money is now flowing into something much more fundamental: rare earths. And MP Materials Corp just reminded everyone why it's at the center of this critical mineral megatrend. Over the past month, MP stock has jumped over 40%, surpassing the S&P 500, the tech sector, and the wider metals and mining sector. But the surge didn't happen out of nowhere. It was driven by a series of macroeconomic tailwinds, strategic deals, and a major Apple catalyst that could transform the entire rare earths industry. Operating out of the Mountain Pass mine in California, MP is the largest rare earth producer in the Western Hemisphere. Unlike most competitors, MP is building a vertically integrated supply chain from raw extraction to NdPr metal production and eventually full automotive-grade magnets by the end of 2025. That magnet capacity is already backed by both General Motors and now Apple, tying MP directly to EV adoption and the AI hardware arms race. Even more compelling? The U.S. Department of Defense has invested over $439 million into MP since 2020. And Bloomberg recently reported a new DoD initiative to inject even more capital into domestic rare earth refinement. This move would accelerate MP's mine-to-magnet vision and help the U.S. break free from China's 85% monopoly on rare earth processing. In April, MP halted all shipments to China, citing national interest. That's not just posturing, it's a signal. Washington wants domestic rare earths, and MP is delivering. Meanwhile, the company is expanding globally, signing a joint venture with Saudi Arabia's Ma'aden to establish a second rare earth supply chain outside U.S. soil. Now, let's focus on the technical setup, because what just appeared on the chart wasn't random. Back in late June, MP Materials was quietly consolidating around the $38 to $40 range. But then, boom, it broke through its long-term ceiling at $50, supported by heavy volume, confirming a textbook breakout. That breakout wasn't just a speculative wick, it was backed by strong conviction, likely institutional. As of July 15th, MP closed at $58.22, a remarkable 280% increase year-to-date, and climbed further in after-hours trading to $60.48, a gain of 3.88% for long-term investors. If you're playing the long game and you believe in the EV megatrend, Apple's US supply chain shift, or defense tech realignment, then it's not too late to start scaling in now. This isn't just a rare earth stock anymore. MP is turning into a strategic U.S. asset, one that could be vital to national resilience and energy independence. If the stock retraces further, that's your chance to build a full position near the $42 to $45 zone, which served as a key base during the consolidation phase. MP Materials is no longer just a speculative trade. It's a geostrategic asset with increasing institutional backing and multi-billion-dollar potential gains. Now, let's discuss execution, because spotting a breakout is one thing, but knowing how to trade or invest around it is where the true advantage lies. Are you trading the breakout or accumulating for the long term? Share your move in the comments. If AI technology continues to advance, D-Wave QBTs and MP stocks could become one of 2025's hidden success stories or the next Nvidia. If you find value in this video, don't forget to like, share, and subscribe for more market insights.